Hey, what's up guys? Welcome back to the channel. My name is Frank Mularcik, and in this video we're going to be taking a look at Disney stock, ticker symbol DIS. And they actually reported earnings just last week, and there were some pretty interesting results and reactions from the market as a whole. So I just wanted to talk about that a little bit. I have not talked about Disney on this channel before, mostly because they do not pay a dividend anymore. That got cut basically in the March spring timeframe of 2020 for obvious reasons, that is. And since then they've basically decided that going forward, at least in the short term, they're going to focus on growing their business and not paying a dividend to shareholders. So that's mostly why I haven't talked about it specifically on the channel, but I do think it's a pretty interesting company. It has a lot to offer for investors, so I did want to talk about their earnings here. So these were released on November 10th, 2021 for the fourth quarter and full year fiscal 2021. So they reported earnings for the fourth quarter that ended October 2nd, 2021. So diluted earnings per share for the quarter was 9 cents compared to a loss of 39 cents in the prior year quarter. And excluding certain items, diluted EPS was 37 cents compared to a loss of 20 cents in the prior year quarter. For the year, diluted EPS was $1.11 compared to a loss of $1.57 in the prior year, and excluding certain items, diluted EPS was $2.29, which was an increase of 13% from $2.02 in the prior year. So obviously a lot better earnings, this year than 2020, but that's definitely expected with the impact of COVID-19 on their business and a lot of their parks and cruise lines and entertainment type products and services that they offer. So those were definitely hit hard, and they still haven't fully recovered. So they're talking here about what their CEO is saying. He's talking about the 2-year anniversary of Disney Plus. He is extremely pleased with the success of their streaming business with 179 million subscriptions and 60% subscriber growth year over year for Disney Plus. So they're continuing to manage this direct-to-consumer business for the long term, and are confident that our high-quality entertainment and expansion into additional markets worldwide will enable us to further grow our streaming platforms globally. And these are basically basic info for the fourth quarter and the total year. So revenue is around $18.5 billion compared to $14.7 in the prior year, which is an increase of 26%. And for the full year, though, revenue is around $67 billion compared to $65 billion, which is only an increase of 3%. And looking at operating income, total operating income was $1.6 billion compared to $600 million last year for the quarter, and then for the full year it was around $7.8 billion compared to $8.1 billion for the full year. So that's actually a decrease of around 4%. And then if we look at the EPS, we basically already talked about that, but there were some nice increases there. And then actually free cash flow greatly decreased, and it was about $1.5 billion for this quarter compared to $900 million this quarter last year. So that was definitely a good increase, around 60%. But on the year, a big decrease there of around $1.9 billion from about $3.6 billion the prior year, which is almost a 50% decrease. The fiscal year basically ended at the beginning of October there. And then they kind of talk about the different segments within their business, which we're not really going to go through specifically. And then they talked about that for the full year and the individual quarters, which we're not really going to go through specifically. But we do want to look at subscribers. That was one of the big things I think in the earnings report that surprised some people. So for Disney Plus, their subscribers was 118 million at the end of October 2021 compared to 73 million at the end of October 2020. So that's an increase of 60%, which is awesome. But if we look, a little more nuanced of a view, we can see that the growth from the third quarter to the fourth quarter of 2021 was actually pretty small. So this is sort of a chart here that I found online of Disney Plus subscribers. So you can see it's increasing fairly rapidly, but right here, Q2 2021, 103 million, and then they had a nice increase of around 14 million to 116 million Q3. But then Q4, which is not updated yet, was 118.1 million. So that's only 2.1 million additional subscribers they gained in that quarter, which is significantly lower than the growth they've seen in a lot of past quarters, and obviously, eventually subscribers are going to go slow down, but they have sort of been pushing this idea, at least from the management and upper level management in the company and leadership, that these subscriber growth numbers aren't really going to slow down, and if anything, they expect them to accelerate. At least that's what they've said in the past, as they're able to get more custom content on their platform. So that's a little bit interesting to see that was not as much of an increase as a lot of people expected. And I think that's why the stock reacted so much, or at least that was one of the big reasons, which we'll look at in a minute. But we also want to scroll down here and find the balance sheet. You can see current assets around $34 billion at the end of this quarter, compared to around 35 at the end of this quarter last year. So pretty much about the same, not much of a change there. But if we look at current liabilities, those are around 31 billion right now, compared to around 26.6 billion last year. So a little bit of an increase though, but still, those current liabilities are less than the current assets, which is always a super easy check, and that's always a good sign to see from a company. And looking at total assets around $203 billion, which is pretty much the same as the 201 from last year. Those is a slight increase, but that could just be random, and not necessarily random, but it's not really all that significant either, I would say, at this point. And then looking at the total liabilities are around 10 billion dollars there, because the total equity is 93 billion, and then the total liabilities and equity is 203 billion. So that means the total liabilities is around 110 billion, which is pretty interesting to see. And also, I did want to mention, the situation with their dividend and share repurchases, which right now, unfortunately, Disney does not really return any direct value to shareholders in the form of dividends or share repurchases. So that's something I kind of focus on a little bit more on this channel. I focus on companies that do, reward their shareholders a little bit directly through the form of dividends mostly, but we also talk about share buybacks as well. And unfortunately, Disney does not do either of those. Basically, those got cut in early 2020 and 2021, I believe. And word has it, at least, that they're not going to be back at least for a few years. So that is one downside, I guess, to Disney stock, is you're not really getting anything right now. But if we do look at the stock price right now, this is going back, about a year of what we're looking at here. And as you can see, if we go back a little bit further, actually, this was about the COVID crash here. So around $120 a share before then, and then crashed down all the way to, around 85 or so dollars, which was pretty significant. And honestly, that was a pretty nice buying opportunity for sure. And I think a lot of investors got in there at a really nice time. We can see a lot of buying around here in this range, which is pretty cool. But if we zoom in here a little bit, they were kind of trading up here, and they even I think they got above 200 at some point. They did get just above 200, it looks like, briefly around March of 2021, and they really had a meteoric rise right here. And you can see from the RSI that it was definitely classified as overbought, that is, in this range. And then they kind of trailed off a little bit, and have just kind of been declining over the past 6 months to a year or so. And then if we zoom in over here, we can see that just recently they dropped, from around 175 to around 160, and then a little bit more to around just below 160 on Friday. So that definitely could be a good buying opportunity for a lot of investors. As you can see, the RSI is sort of just on this oversold threshold, so that's at least something to consider. And they have broken below all these moving averages that I have drawn out here, and those are definitely good signs that it could be a good buying opportunity. But at the same time, there are obvious concerns and reasons why the stock dropped, and that is mostly because of the slowdown in subscriber growth with Disney Plus and some of their other streaming services. And those are some of the big drivers of the I guess hype or excitement about Disney stock. So I think that's definitely something to be concerned about. Just if you were considering to invest, or if you are an investor, really figuring out those numbers and whether you think it's, sustainable to keep growing that quickly, or will, the vast investment that Disney is making in a lot of this custom content, will that really draw a lot of more customers to the platform, or will it just kind of retain the current customers? And they're spending all this money on developing this content. Will that really pan out for them? I think that's one of the other questions as well that people have been asking recently. So for me, I don't think I would want to be buying Disney stock at this price. I definitely would want it to be lower, definitely below 150. Honestly, below the 130 levels would be pretty nice. So as of right now, I really don't own any aside from exposure I get through investing in index funds. But I would love to hear your guys' thoughts in the comments below, and I will see you in the next one.